Welcome to The Explainer. We're always hearing about these incredible private companies that are changing the world. But how do you actually get a piece of that action before they go public? Well, today, we're diving right into that. Just look at a company like OpenAI. We're talking valuations hitting $500 billion. That is a mind-boggling amount of wealth being created. The catch? It's all happening behind closed doors, completely walled off from the public stock market that most of us use.
So that's the big question, right? If these companies are creating so much value, why are the vast majority of us totally locked out? This is the fundamental problem we're going to unpack today.
For literally decades, investing in these high-growth private companies has felt like trying to get into the most exclusive club in the world. It's this velvet rope economy, and unless you're a big-shot institutional investor or incredibly wealthy, you're not on the list. And there are some very real reasons for that.
So why the velvet rope? Well, it boils down to this. On one hand, you've got old-school regulations that were honestly put in place to protect everyday investors from super risky deals. On the other hand, for a private company to take money from the public, they face a mountain of paperwork and costs. The result is that most of us have to wait for the IPO, the initial public offering. But by then, a lot of that explosive early growth has already happened.
But what if there was a key to unlock that gate, a way to sneak past the velvet rope? Well, a new technology is here that promises to do just that. It's called tokenization, and its biggest fans say it could change the game for everyone.
Okay, so what in the world is tokenization? Let's make it simple. It's just the process of turning ownership rights into a digital token that lives on a blockchain. For hundreds of years, a piece of paper, a stock certificate, proved you owned a piece of a company. A token, it's just the 21st century version of that certificate.
And you can see the evolution right here. We went from these clunky, slow, physical paper certificates to digital tokens that can be traded instantly. All blockchain technology does is make creating and moving these digital claims of ownership way, way more efficient than it's ever been.
So what is the big deal here? Why is everybody so excited about this?
Well, it all comes down to one thing: getting in on the ground floor. It's about getting access to those potentially life-changing returns that have been out of reach for so long. This quote really just hits the nail on the head. The whole dream is about getting in early on the wealth creation. Can you imagine investing in a company like Google back when it was just a startup in a garage? That is the massive potential upside that tokenization is claiming to offer. And listen, this isn't just hype or wishful thinking. The data backs it up. If you look at the historical performance over the last 25 years, private market investments have, on average, blown past public market returns. This is the kind of wealth creation that, up until now, has basically been a private party for the super rich.
And hey, if you're finding this breakdown interesting, just take a quick second to hit that like button and subscribe so you don't miss out on what we're covering next. It really helps us out.
Okay, the promise sounds amazing, right? But, and you knew there was a but coming, we really need to pump the brakes. There is a huge, critical catch you have to understand. When you buy one of these tokens, what are you actually buying? Because it's probably not what you think.
This is probably the most important slide in this whole explainer. You are not buying a share of the company. Let me say that again. You're not buying a share. What experts say you're doing is making a side bet. It's basically a financial contract with a third party that's tied to the company's future value. You're betting on the price, not owning the asset. And when you put them side by side, the difference is just night and day. A traditional stock gives you real ownership. You get to vote, you have clear legal protections, and it comes straight from the company. This tokenized instrument, it's a side bet. You get zero voting rights, the regulations are a giant question mark, and get this, the company you think you're investing in often hasn't even approved it. And that brings us to the risks. Man, there are a lot of them. It is the regulatory Wild West out there. For example, OpenAI itself came out and said they did not endorse these tokens being offered. You have no shareholder rights, the company doesn't have to show you its financials, and then there are all the unknown unknowns, the hidden risks of a technology that's just this new. So after all of that, what's the bottom line? What's the one thing you should really take away from all this? Well, let's distill it down. Look, the technology of tokenization is incredible. It has the potential to totally change finance. But the way it's being used right now to sell access to private companies, it's like a brand new supercar driving on a road that's still being built. It's untested, it's risky, and the guardrails just aren't there yet. At the end of the day, it really just comes back to one of the golden rules of investing. something Warren Buffett has been saying for years. If you don't understand what you're buying, who you're buying it from, and what your rights are, you probably shouldn't be buying it. It's as simple as that.
So here's the question we're left with. Is this whole thing the future of finance? A way to finally open up those exclusive markets for everyone? Or is it just a shiny new high-tech wrapper on an old way to lose money on hype? Right now, the jury is still very much out.